you, sir. Governor. So everybody is saying, the message is the same from everybody. It's not 2008 all over again. Could it become 2008?
Well, I don't think so. I mean, we basically over the last few days and week, we've tortured the data to see, what was the situation of our banks, whether we would have some vulnerabilities that would be comparable to SVB in the US. And what we see is actually good numbers, capital ratios are high, liquidity is high. So of course the system is based on trust, but when we look at the numbers, I mean, we are on the safe side.
Okay, so the resolution by the Swiss National Bank, I know you're not going to suddenly criticize a fellow central bank, but was it the right decision in your view to get rid of the bonds and keep the equity? Controversial. You'll agree it's... All right, let's skate to thick ice. You'll agree it was controversial.
It's probably controversial, yes, but I don't know the details of what was in the, in the contracts. And apparently, I mean, they had a good basis to do it, so they decided to do it.
Let's talk monetary policy then. So, rates... Have we reached the peak yet, do you believe, in Europe? And I ask you this because you're on the Governing Council. And every politician will always say to me, that's up to the Governing Council. They are, monetary policy independent. But you're on the Governing Council. So where do you stand?
Well, if we go back to the base case and to the projection we just made 2 weeks ago, we had more to do. Now, we should take the time that we have from, today to the next meeting to see if these turmoils in the market, which seem to be abating, would have any implications for monetary policy. But, again, we have a very strong banking system in Europe. And the base case was still on the basis of our projection that we would have to do more.
The difficulty, of course, now is whether or not the banking crisis has, as Jay Powell said, provided sufficient tightening. Now, nobody is now expecting a recession, technical or otherwise. As far as I can tell, there's pretty much a consensus on that. But the banking crisis may be doing your work for you.
It is a possibility. That's what we need to look now. But again, I think in Europe the risk is maybe lower than the US because it's not like banks have to increase buffers of capital and liquidity. And so there might be here and there some impact on the way they, credit conditions may become a bit stricter, but we don't expect that. Really.
I was reading in the New Statesman an article by Wunsch, who you'll be familiar with his writing, and he basically says that actually Europe's deceiving itself, that there is a sort of a pressure cooker building up in the European monetary system that is not as prepared as it should be if there was another crisis. Do you see that?
No, I don't. I mean, it's always easier to talk about what you see than about what you don't see, and I cannot exclude here and there that there would be still, one financial institution that has taken some risk that we have not seen. But what we see again is good, and we have a robust system.
You are a student of crises. You were around at 2008, right at the centre, and saw the resolution of major institutions. And you've seen monetary policy wax and wane. Are you content at the moment with monetary policy?
Yes.
I suppose it would be shocking if you'd said no. What would you like to see next?
Well, I think now we're in a good place I mean, we've had some catching up to do. We raised rates by 75 basis points, 50. And now I think we can see where inflation is going. I mean, headline is going down. Core is still persistent. So we need to look at where it's going. And on the basis of that, again, the base case is probably that we have to do a bit more. And we'll see.
I could spend all evening trying to get out from him what does a bit more need, but I guess not. Thank you, sir. Very grateful.